little screen ready and make it make sense for you. Here you go. So now we're gonna get into this article. I'm gonna put on my reading glasses. Yeah, your boy. I can see through everything, but not everything. You know what I'm saying? Keep it buck for you. All right. Reach the screen, not too bad for you. Perfect. Scroll up. Now we're gonna get into this beautiful article. Now, in this article, we are talking. This article is actually from the insuranceandstates.com and talks about whole life insurance rate based on the age with charts. Now, this is designed to meet your needs and goals. So we're gonna get into it. Now, this first graph. Now we're talking about whole life. Now, depending on how you set it up, you can set it up to pay it off within the entirety of your life, which is the day you start paying to the day you kick the bucket, right? Technically, within 3 years, it pays for itself. And some people set it up to only, pay it off within 10 years. After 10 years, excuse me, you're good. You want to put normal money in the policy. Some people do it for 10, some people do it for 20. It's next option. Well, I'm going to show you what it looks like. So these are the ages. You got age 40 to 65. How much they put down annually. You know what I'm saying? And the coverage amount. First one is coverage. 100,000. It's whole life. 100,000. Put down 3628. What's that mean monthly? Divide that by monthly for you. I'm talking about 300. Yeah, $300. 300. 302. So 302. That was the challenge. So 302, right? If I was 40, if I got started 100K, whole life, not a term. If I got a term policy, it might be like $1 million for like the same amount, or even cheaper, $1 million for like half of that amount, or yeah. So that's how much it would cost. If I was starting in my 40s, as you see, the older you get, 45, way more for the same amount. Forgive me. Let's just move from 45 to 55. Now 55, I'm a grandfather now. You know what I'm saying? I got my hair gone. I got some grandkids, 2 of them, they're already here. And if I got started, because I want to leave them with something, only got 100K, I'm paying 500, no question, 5,000, 550, 5082. So what does that look like on this calculator? 50. Oh, Jesus Christ. Okay, that is $400 and some change a month, right? But this is only 100. Let's talk about 500, right? 500. Oh, that's dangerous numbers. Now, Jay, I don't make that much. All right. Not yet, though, but you will be. What do you think? $17,225. All right. What does that look like monthly, right? I'd buy a great number. That's a grand and some change, baby. That's close to rent in Florida. Florida. So, but he get $500,000, right? You're thinking this is at 40. At third, and let's just say 55, I got grandkids. That's 28K. And what does that generally mean? But the bonus of this is that it's actually building cash value. So every year, that money is going up. So within 3 years, remember, this pays for itself. So after 3 years, you can be like, I'll let the policy pays for itself. And that you're good. Or you can keep on paying for it. This, if your death benefit will actually increase. Let's just say, instead at 40, he's at 60. What does that look like at 60? That's a big leap. 40 to 60, at 65, that's like 25 years. In 25 years, this might be already at $1 million some change. Growing tax-free. Death benefit goes up. You got more money in the bank, you can take care of it. Or you can do the same thing with this coverage. That's just 302. You can do a lot more damage, but it depends on what you're trying to do for yourself and your family. You want to build tax-free advantage. You want to be debt-free. You want to be financially free. If rich people do it. I mean, if rich people do it, how you think they stay rich? So I'm just going to shut up and continue. So next one is the same thing. I'm not sure why it's a little bit cheaper. Let's read it. So the following sample 20 paid whole life insurance quotes are from an A-rated carrier or better plus mail. Annual rates are for informative purposes only and must be qualified for. Alright, so usually the longer you go, the cheaper it is. So the first one was 10 years. The second one, 20 years. Third one, don't really say, but it's average mail, but it's a lot more affordable, to be honest with you, just by looking at it. So this one says, I want to pay it off within 20 years. After 20 years, I don't want to look at it no more. All right, so, that's cheap. Thank God, cheaper than the other one. But that's $22.77. What does that look like monthly? $22.77. Oh yeah, that's affordable. That is reasonable. Jesus Christ. So with those numbers, you can actually do a lot of damage. He was just at 100K. What if he was at $500,000? That's how much you put down yearly, $10,470. What does that look like annually? All right, $872, right? If you want to do, obviously a cash advantage for yourself and your family, of course you will need this, because if anything happens to you, let's just say at age 55, what if you got cancer, you got to put down 50K to help you do chemotherapy. This goes on. You get that from your life insurance. What if your son decided to get married, right? At 50. At 50, guess what? Your son gonna get a girl. You're gonna get some grandkids. God bless your soul. That's why at 55, you can take care of him a little bit. You can, take him to Disney. I had to worry about it. I'll take the kid and grandkids to Disney, right? You thinking like, damn, Dad, like I'm trying to work. I make this money. You take my son and daughter to Disney. Go ahead. I need a break anyway. But how you think he's taking them to Disney? He's taking them. He's pulling the money out his, insurance policies. That's one way he can do it. So this 401k, which taxes him in a Roth IRA account, which he can't pull it out until he's 59 and some change. Right? Or with cash value life insurance, you can do it anytime you want. Turn yourself into your own bank. You loan yourself and you can pay it off if you want to. I mean, it's pretty much simple. Why you think rich people do it? So the next one we get into is, regular smuggler amount. So this might be like 20. Oh my goodness, this can't be annual. I don't believe it. Okay, the following sample whole life insurance quotes are based on a preferred plus male wanting ordinary whole life insurance to age 100 with an A-rated insurance company or better. Yeah, this is monthly rates for informational purposes only and must be qualified for. So this is monthly. This is for whole life. It's pretty damn good. $83 a month, bro. Look at that. $20 a week. Hold on. Article. So that's $20 a week and some change, right? I'm just telling you to don't go to Chick-fil-A, right? Or don't go to Popeyes if you're black. But hey, $25, $92, $30, $105, $50, $200 a month, and $60, $324 a month for the same coverage. Okay. Now you do that. I ain't gonna go up and go down. Jesus Christ. But that's what you can do. So look, the younger he starts, the cheaper it is. The older he starts, the more it costs. Now, luckily for women, it's a lot more cheaper because women live longer. So I hate to break it to you guys, we gotta spend a little bit more money. Probably because we make more money. I ain't gonna lie to you, but it is what it is. So that's the first article, and with that article, that one focus more on the younger you are, the cheaper it is. The older you are, the more it costs for men and women. And that was just on men, So you can actually do a lot more for insurance. It is affordable. Remember, it depends how you set it up. That was just whole life. What if it show you terms? Those term policy might be like $83 for like $1 million term. $1 million term? What if I die right now? Not right now, but if I croak, God forbid, I'm driving, somebody hit my freaking car, I flip and end up knocking out. I got 4 kids to take care of. Well, not 4. Let's be realistic. If I got 2 kids and a girl I'm talking to because she likes me because my wife divorced me, all that extra crap. But guess what? My kids are covered because I have $1 million term. Got term. Now, if we got permanent solution, only 100K. If that say they happen to you, they just got 100K. You know, your ex-wife now, she got feelings for you. Now she boo-hoo crying. You're like, baby, why you crying? You left my ass. But that's perfectly fine because she only got 100K. But you thinking about your kids, man. You got to take care of your kids at least. But you can't do a lot with 100K. You know. So I want to be able to. What if that doesn't happen? And I just had a term. Oh, great. I had a term for those 10 years. Nothing happens to my posterior. I get nothing. I got to buy a whole new policy. So that's a big kick in the pants, bro. But what you can do or could do is always have a term in whole life. That's it. You know, you can set up pretty nicely that if that was situated were to ever happen to you, like you driving down the road, you bought it 9 years ago, you flip, you hit a car, you hit a Karen, that shit goes all over the place, and then boom, you're looking at God like, hey, how you doing? And then God's like, you don't worry about your kids? Like, nah, they're good because I already got protection. You got term and whole life, so they get both. Instead of getting $1 million, they got $1 million and 100K. They got both of it. You know, on top of that, let's just say nothing happens to you. You chilling, 10, 20 years go by, your term drops off, but you had a whole life policy that accumulated cash value, and then your son's like, hey man, I got this girl, I want to, marry her. You like, boy, you too young to understand what love is, but sure, I'll give you 20K. Dang, dad, where you got 20K from? You 401K? Nah, man, I got it from my, I can't tell you that, but you already know that he got it from his whole life, policy. Not even stressing. He's not even stressing, man. If his son's gonna be with her or not. Give her 20K, go have fun, right? Just know that dad got money. And hey, man, I don't know about you. I'm gonna be that man. But the next one will be the last one for today. And after that, we get to our conclusion. So this next one coming up, focus more on pros and cons about not getting into it.